Live from Town Square Towers at the heart of the Jersey Shore. Wake up with Jeremy Grunin. Get up, get out, do something. Join the conversation. 732-505-1160. News Talk Radio WOBM AM 1160 and 1310. Listen online at WOBMAM.com.
Hey, welcome back. Wake up with Jeremy Grunin. 7:07 Thursday, August 18th, 73 degrees. Getting up to 82. WOBM AM 1160 and 1310. News Talk Radio streaming live on the Radio Pup app and WOBMAM.com. 732-505-1160 to join the conversation. We are now talking to our financial guru, Sean Monohan. Sean Monohan offers securities and advisory services through Commonwealth Financial Network. Member FINRA SIPC, a registered investment advisor. Good morning, Sean.
Good morning. How are you? Now we're compliant.
That's good. Now we're all in. Now we can get to the crux of it.
Right. If we're on the air.
Yeah, that wasn't scary at all when the power goes completely out about 30 seconds before you're supposed to get back on, right?
It's a little strange.
Yeah, it was good though. It was good. We handled it very well. You handled it very well. Yeah, exactly. I mean, calmness
that I showed when the lights went off.
I hardly heard you scream at all. It was crazy. It was crazy. I hardly heard it. Anyway, all right. So let's talk. So what are your thoughts? I mean, the markets hit all-time highs in the last 2 weeks. They've kind of backed off a little bit, but they're still pretty good. So what are your thoughts? Right.
Well, last week was the first time since 1999 that all three indexes closed at their all-time highs. So that was that's a long time, 1999. And I guess the question that I get now is what to do next. Are we in for a correction, or are we going to get slapped on the side of the head? Or I get a lot of people also calling and saying, hey, I don't think I'm doing as well as the market. I don't feel like it when I look at my statements. So you have to look at things and say, first of all, if you have a diversified portfolio, times like this can be frustrating because you see the markets going up and sometimes your account is not participating to the extent that you would want it to, right? So that's behavioral finance where people look at it and they say, I feel like I should move more into equities because the markets are going up. That's a formula for disaster. When the markets are going down, it's the same emotional response that creates people to get out. But I guess I personally think that the markets, I don't know. There's a lot written right now where the PE ratios are higher than their all-time highs.
So wait, let's stop there for 1 second because you're talking. Yeah, go ahead, fix it. Just fix it. Go ahead. Good job. Yeah, great job. It's all right.
Bite the bullet.
I saw you're like I want to touch it,
but
I got to touch the microphone.
Yeah, I know the lights were out. I could have done it.
So stop there for 1 second. Let's talk price to earnings ratio, right? So explain that to what that means.
Okay, so that's the price of a stock over the earnings of a rate divided by the earnings of a ratio, and what causes that ratio to go up is an increase in price or an increase in earnings, right? So right now what you have is a 17 PE ratio where the historical averages are more like 14 or 15. Okay, so you'd look at that and say, well, that's overvalued. The prices might come down in line with the earnings, right? We're in a slow growth environment, if you will. But in 1999, the last time this happened, PEs were over 30 times earnings, right? That was the internet bubble. That was a lot of people saying, hey, we're going to change the world by, getting rid of retail and selling dog food on the internet, and nobody's going to go to stores anymore, and we're all going to and that's shaked out. That's partially true, but not totally.
Right.
People still go to stores.
Okay. So good. So we understand price to earnings ratio. Okay. So now you're saying that currently the PE ratio is where?
It's 17.
Okay.
17. So it's higher than normal, but nowhere near what it was when you look at the stats of when the last time all three indexes closed at their all-time highs. Okay. So it's so you could grow a lot between now and then. And the other formula that people look at is they say the earnings yields, which is the inverse, the earnings should match the 10-year note.
Right.
Right now, that ratio is about 5.5 to 1.5 on the 10-year note. Back then, it was the bonds were actually yielding 6.5% in 1999.
Wow.
Yeah, back in the day. Huh?
Yeah, so let's talk about that for a second, because we had talked a couple weeks ago. I think at the time Germany had just started to issue these negative yield bonds, right? Which was clearly an effort to have folks not to have folks invest in bonds, but rather to reinvest in the economy in general.
Yep.
So I've been reading some articles recently about whether or not that's worked. And
they're saying it's not.
In fact, they're saying it's had absolutely the opposite effect. Do you want to talk about that for a second?
Well, I think that's so. You're in unknown territory here with the negative yields. People are, and right now, the reason that the 1.5%. So if you invest in a 10-year Treasury for a second here in the U.S., which is basically the most secure thing you can buy, the U.S. government's going to be able to pay you back. That's yielding 1.5%. And a lot of people say, why would I invest my money for 10 years at 1.5%? Well, because Germany, it's negative. And all these central banks, basically what they're trying to do is spur their economy. And I think that it's scaring people and it's failing. People are, the opposite is happening. I've read the same things. New York Times had an article the other day about it. And they're saying, like, this is not the way to go. Like, this is foolishness, if you will. The debate here is a little different. We're trying to figure out when we can raise our rates without, putting a pin into the balloon. You know? And that discussion is also helping rates yesterday, but nobody really knows whether they're going to raise rates next month
It's
or
still
not.
Kind of up in the air, right?
Yeah,
it's amazing as people try to kind of read the tea leaves.
Right. Sometimes I read it and I wonder what would happen if they just did it. Like they just raised the rates without having these meeting notes and everything else. They used to do that. They used to just do it with no notification to the press.
Right.
And I wonder just, is the banter about it as bad as actually doing it? And there is no conclusion. There's no evidence that, if you talk to 10 people, 5 of them are going to say they're going to raise rates in September, and 5 are going to say not till 2017.
So what do you think?
I don't have a clue. I hate to say it. I mean, it's I don't know. It seems like they have to go up at some point. So my own thing was just do it, and so we can see what the impact is. Like I think the economy it's stronger than it's been. Right? You can argue that. You can say companies aren't growing, and there's a lot of underemployment, baked into the unemployment statistics and so forth. But it is still going in a positive direction. We're in the black. We're going in the right way. And I don't think it's ever going to be a perfect scenario to either raise rates. And I think I made that point with investing. People wait till everything's perfect before they make investments, and then that's you just call the top when that happens. So
So what you do right is most importantly is that you're going to help folks build a portfolio that is going to be kind of insulated regardless of whether rates go up, rates go down, or what have you. That's what's so important about diversification, right?
Yeah. So, I'm trying to give people a peace of mind whether it's a good market or a bad market, and develop a strategy that's going to help them meet their goals, as opposed to trying to guess what the Federal Reserve is going to do, what German interest rates are going to do, or any of these things that we don't control. I keep it in the boat. There was a book written about a rowing team in the Olympics in the 80s, which is I'll bring in the Olympic thing here for a second.
Nice.
But they they talked about this rowing team, and what they focused on was not the weather, not the lanes, not all these other factors that people pay attention to, but only what happens in the boat.
That's all you can do.
We as investors, or we as people, you can only control how you prepare for something. You don't control what happens. I don't know what's going to happen in the markets. You don't know what's going to happen in the markets. You can always have this magic wand and so forth, but you don't know.
No, you can only control. I always think of that like poster or whatever that has has sphere of influence, right? And it's this little area, and then there's everything else,
right?
And just focus on what you can control, because you can't control anything else. And any time you spend outside of that circle is wasted time.
Right.
So when we come back with Sean Monahan, our financial guru, we are going to talk about. Let's talk a little bit about the campaign, and not we're not looking for a political commentary, but we are looking for a market commentary relative to the political campaigns.
Sounds good.
Wake Up with Jeremy Grunin. Back after this.
Wake Up with Jeremy Grunin wherever you go. Download the Radio Pup app for your smartphone or tablet. News Talk Radio WOBM AM 1160 and 1310.
Hey, welcome back. Wake Up with Jeremy Grunin. So we're talking about how the markets are affected here with Sean Monahan, our financial guru. And so we're talking a little bit about how the financial markets are affected. Specifically, now we're 81 days out from the election. Right. And I think we all know that the markets like to be able to predict the future, and they like stability.
Stability.
Right. So is that what we're seeing? I mean, what do you think's happening?
There's been a lot written that could be the case here as Hillary Clinton pulls ahead of Donald Trump. Right. And I'm not saying that's true or not true, but there's definitely a school of thought that some of the positive aspects that we're seeing in the market are related to the fact that seems to be a little bit more certainty in the outcome of the election. Okay. And I think if it was, and I said that actually a few weeks ago when I came in, what we do know is that the market does not like close elections that could have dramatic consequences one way or the other. They're also predicting probably a split, government where we have the House of Representatives is likely to stay Republican. The Senate seems to be a toss-up actually, but it's still either way. You're gonna have to work together to get anything done. Nobody's gonna have an open, just rule.
Right.
So that might be also providing some certainty to the markets and then as far as there's always, well, how do you invest in a Hillary Clinton presidency? And people would say, okay, the financial companies are probably going to get hit a little bit because that's one of her targets, if you will. One of her missions is that she wants to continue to reform the financial environment. Coal industry is probably, a lot of the energy might get hurt. Clean energy might do very well. But you don't really know. At the same time, I was reading this a couple weeks about President Obama. If you had said, hey, what's going to do really well under the Obama presidency? Two of the things that have done best, guns and healthcare.
Right.
So if you had anything to do with healthcare, whether you're an insured device maker, whatever, you've made money as a stock, as a whole, right, under this presidency. And I don't think anybody predicted that.
No.
And it's the same guys that predicted you better, the whole gun thing is another issue. But people buy a lot of guns because they're scared that they're going to lose their guns. And,
right.
And those companies have printed money over this administration.
Right.
So it's very difficult to predict. Okay, if Hillary wins, financials might be in trouble, and some of these pharmaceuticals might be in trouble, and some of the energy stocks and clean energy might do well, but it's you don't really know. It's not that easy.
Right.
But I do know that the stability that we're seeing in this election, I think, is, in my opinion, having an impact in the markets.
Right. And conversely, if Trump wins, you don't know what effect that would have on repealing Obamacare, or how that throws that whole sector back into the mix.
Yeah, or anything, right? I mean, I think that's one of the trouble with that campaign is you're not really sure what's going to happen.
Right. You're not 100% sure exactly.
Repeal it, not repeal it.
You're not exactly sure where you're going.
No, you don't. And I think that's I think that's true. Whether you support him or not. I think that you don't really know exactly what's going to happen.
So when we come back, we're going to do we have one more segment.
Good.
Right?
Yeah.
We have one more segment, and I would like to talk. I know it's the end of the summer, right? Which means we're getting now to the back of the year. And I would like to know a little bit about what you think your clients should be preparing for a little bit as they get towards the end of the year, like what they should start kind of thinking about.
Okay.
Do you know what I mean? As they start to do their end of year planning, especially as a financial planner.
Sure.
Right? Sean Monahan, our financial guru. Wake Up with Jeremy Grunin. Look at you. You smiled again, Zach. I really got this, I got this clock thing going on in my head right now.
Yeah, you were cutting it close on that one, but
no, I had it, man. I'm on this, man. I'm like a professional. Look, Hometown View is next with Kevin Williams. Then the news. Then we're back. 6 minutes. You can hang. Be back with you.
Coming up next, the latest from WOBM News, the Town Square, New Jersey News Network, and Fox News Radio. Wake Up with Jeremy Grunin. News Talk Radio, WOBM AM 1160 and 1310. Live from the Jersey Shore to the world. Get up, get out, do something. Wake up with Jeremy Grunin. Take the show wherever you go. Download the free Radio Pup app for your smartphone or tablet. Join the conversation. 732-505-1160. News Talk Radio WOBM AM 1160 and 1310. Listen online at WOBMAM.com.
Hey, welcome back. Wake up with Jeremy Grunin. 7:34, Thursday, August 18th, 73 degrees, getting to 82. WOBM AM 1160 and 1310 News Talk Radio. Streaming live on our Radio Pup app at WOBMAM.com, 732-505-1160. We are joined in our studio by our financial guru, Sean Monohan. So, Sean, it's that time of year where I think people start to need, I go by what my dad and I do, where it gets to be September and he starts to say, okay, we have to start thinking about the end of year.
Okay.
Right? You got to start. Yep. It's we're not doing anything just yet necessarily, but we start to be thinking. So what do you advise your clients to really start thinking about as we get towards the fourth quarter?
Are you talking about taxes?
I'm talking about planning. I'm talking about what should they be looking for?
Well, I would take it a step back, and I think that just the environment that we're in, if you're going to look at your portfolio and you're going to try to figure out your strategy going forward, you might as well do it when the market's at the all-time high. This is a great time. You want to fix your roof when the sun's shining. And you like that?
I like that. That was good.
I think that was JFK, actually.
Oh, well, all right. I was giving you full credit, but go ahead.
But you want to make sure that you're on the right track going forward. Good market, bad market. Make sure that you have a strategy in place and that you're effectively balancing risk and reward. Okay. Now there is a lot of tax ramifications. For some investors, to be quite honest, a lot of my money is IRA money, so it's qualified, meaning that it's just the tax loss selling is not always as important as it might be with other people's portfolios. But certainly that comes into play at the end of the year. It's difficult to do again when the markets are at their all-time high.
Yeah, yeah.
But yeah. So, I would take a broader look. I always look. The beginning of the year isn't much different than the middle of the year for me.
Right.
When I'm talking to folks, I'm not trying to figure out how to make the most of their money between September and January.
You're not looking at day trading.
I'm not. And I'm taking a long-term approach with my clients, my investors, and most of what I do, even my own business.
So on a kind of on a similar note, we've mentioned many times now that the market is at its height, right? And so the conventional wisdom would be, this is not a good time to buy, right? Because the market's at its height. But that being said, there's still lots of opportunities, right? There's still always diamonds in the rough, right?
Right. Yeah. And I think that the way I look at it a lot of times is I don't know what the market's going to do between now and say the end of the year, right? Or now in the election or whatever it is. But what I do feel pretty confident about is that in 10 years, the market will be worth more than it is today. So is it a good time to buy? Sure, I think so. If your time frame is long. If your time frame is shorter than that, it's a good time to evaluate whether you have too much exposure in the market.
Right.
And a lot of what we do is, we try to have a plan in place to rebalance portfolios. Okay, so you rebalance a portfolio, meaning you sell some of the things that have done well and buy some of the things that are not doing well. And just maintain a balance in the portfolio. That also happens when the markets run up like this. So you do it, say if you do it twice a year, you set up an investment policy statement that says, I'm going to rebalance my portfolio twice a year, 4 times a year, whatever it is, or as needed. And this would be a as needed time. This is a period where, if you're going to look at it, this is a great time to look at it.
All right. Well, good news today already as Walmart has announced their announced their earnings, and their earnings exceeded expectations, so their guidance has been raised, which is a good sign for retail,
right?
Which is a good sign for consumer spending, which should bode well for the market, especially when the largest retailer in the world shows. So
goes Walmart, so goes America.
That's right.
Honestly,
that's a good start for your day. Look at you, we're off to a good start.
I guess, I got it going here.
I'm telling you, Sean. So, all right. So, why don't you tell people where do they go to learn more, where they can reach you?
Yes.
Because I know you're our financial guru, but you could be our listeners'
Sure.
financial guru
Sure.
too. So talk about that.
I encourage people to give me a call if you have questions or you want to bounce something around. You can reach me at 609-693-3800. You can also email me at Sean, spelled the correct way, SEAN, at, and short for my company, it's Financial Alternative, so it's FINALT.com. So it's Sean at FINALT.com. I'm located here in Toms River, so I'd encourage people to call, or if you have something you want me to discuss on the show or question, comment, love to hear from you. I'm around.
And listen, we learned something today. I mean, I'm sure most of my listeners already knew, but the time to repair the roof is when the sun is shining. That was a John F. Kennedy quote. So
It was, huh?
You dropped some more aside from your voluminous financial knowledge.
Just throwing down knowledge, just dropping knowledge.
You also dropped a quote on me that I will be sure and use multiple times a day, so that it's deeply ingrained in my head.
Well, you can credit me instead of JFK if you want.
I will say. Well,
comfortable.
I'm gonna footnote you because I heard it from you. I mean,
Do you walk around and just say, as I was saying on my radio show this morning, do you walk around all day and say that?
No.
You know, some people,
No.
well, because I was doing this, I have friends that, since I'm a teacher, everything's prefaced with, well, I'm a teacher. So do you walk around all day and say, well, as I was saying on the radio this morning?
No.
No?
And similarly, I don't think Kevin Williams will ever do a spot saying, do you think Jeremy dyes his hair or has had work done because you can't look that good at 42? He's never saying that either. So there's a couple things that
I'm probably going to wonder if you have to cut it at all, or does it just grow in
doesn't.
slowly like that? So
I just put my Flowbee back on and I cut around it. Sean Monahan, financial guru. Wake up with Jeremy Grunin. Back with more after this.